Hello, welcome. Okay, so to follow up on our previous content that we created, we realized that we also need to create some checklists. And what we did is that we've created this 5-step survival checklist for life and finance, so that we are always disaster ready. So the 5 steps are, okay, the first step is called build an emergency fund.
Yep.
Okay, the second is to review your insurance coverage. The third is to diversify your investments. The fourth is to secure important documents. And the fifth is have a financial action plan.
So the first one, as we always have been saying, build an emergency fund is nothing new lah. It's one of the most fundamental basic financial guidelines already.
All the financial book you read, this is one of the first
And they always tell you it's 3 to 6 months.
Yes.
But we also have been telling our listeners, if you are self-employed, if you're a business owner, chances are things can be a bit more volatile for you. In that case, then 3 to 6 months may not be relevant. You might want to have even 12 months or even 24 months in certain cases.
That's right. So emergency funds is always things that is that you need to pay and it's important expenses. Okay, such as mortgage. I think mortgage is one of our biggest expenses that we have. So that's always fixed, right? Yeah.
Your insurance premium also.
Insurance premium. That's right. Yeah. So when we speak to our clients, they also tell us 3 to 6 months of expenses. They usually will have it but sometimes people will have this psychologically emergency fund. They need to have it in their bank account to make sure that they are safe. Yeah, so that's pretty normal as well. Yeah, so emergency funds really varies from people to people. Whether you are employed, whether you are self-employed, whether you are, your age, how old you are, it really varies accordingly. Yeah. So this is the first point, build an emergency fund. So with that, you have a good buffer and safety net. Second is to review your insurance coverage. Yeah, so I like what just now Jimmy said. You don't buy insurance during a crisis or when you're in a crisis. You have it beforehand. Yeah, so always review it, whether is it enough or not.
So this is also a reminder I mean, we always take things for granted, especially Singaporean, right? And no disaster happens. Similarly in life, a lot of people take this for granted, thinking that I'm never going to fall sick. I have an active lifestyle, I don't have any family history of illnesses, but that doesn't really mean, one will never be sick. So I'm not suggesting that we will always fall sick, but I think it's always prudent to plan in advance. Besides, if you are sick, chances are you will not be able to buy any more insurance.
Yeah, things always happen when it shouldn't happen. Like, some of our claims that we handle is people don't smoke. People who exercise very regularly, eat healthily, but things just happen. They don't have any family history and stuff like that. So we want to prepare them for this kind of emergency, just in case. So review your insurance coverage with your financial advisor. I'm pretty sure, and I hope, this is what we do, that when it's enough, we will tell them it's enough.
And it has to adjust based on your life stages, right? I cannot be having the same insurance portfolio when I was in my 20s and then expecting the same portfolio can tide me over when I finally have a mortgage. I have like 2-3 children to pay for, and I have maybe an aging parents to prepare myself for.
Right, so that's the second point for review your insurance coverage. Okay, third is diversify your investments. Right, we don't go full everything 100% on certain crypto, maybe like crypto. So that's very silly. So when crypto just go way south, then you are gone already. So we don't do that. So diversify investment, spread your eggs into different baskets. Right, diversify can be from geographical, can be from sectors,
or even asset classes.
Properties, stocks, shares, bonds, gold. Can be so many different ways. Actually, one of the better ways to diversify is also fund-based. Right, just invest in funds. It really diversifies so many sectors, geographical even. So fund-based is a good way to diversify your investments. Okay, so that's the third point, diversify your investment. Fourth is to secure important documents, and this is, I think, one of the least thing that people speak about. I don't hear any people speak about this. Securing your important documents.
Securing important document doesn't mean your birth cert, marriage cert. We mean things like your will, your scheduled asset. I mean, if you think about it, if in the case of emergency, someone passes on, how do you know if you have where are you gonna claim assets from? Are there like insurance from different companies out there? Are there like different bank accounts I should be aware of? Are there like some jewelry from different I don't know, different places, my home even, to be aware of.
Just a quick question for the audience. Do you know how much your husband or wife have in a bank account? I think that's as simple as that. Or do you know how many assets or how many watches or how many credit cards your husband or wife has?
Correct.
So don't talk about even insurance policy. Sometimes insurance policy, they just buy and then they forgot about it.
And you see, for things like CPF nomination is government, so you do a nomination, the government know how to distribute. If you want to write your own will, let me ask you, if I have my spouse wrote a will and then I don't know where my spouse keep the will, it's as good as no will.
Nobody knows. The lawyers also don't know. You pay the lawyers also don't know that you pass on.
So you need to know, your family need to know where's the will, where's all these important documents.
And at least speak to your husband or wife about all this. You have written a will, just let them know that you written a will. Where is it being kept at? Just to let them know, just in case anything happens, there's proper documents to save the trouble and save the time and save the money as well. So that's the fourth thing, to secure important documents. Okay, last but not least is to have a financial action plan. I think this is something that we always must have in our life, to be very clear on what we really want in our life, in terms of financially or in terms of as a human, as a human, you know what you want in life. So same thing like your financial plan. What do you want in life?
So this is like a thesis or rather the blueprint of a financial plan, the roadmap so to speak. So that you know in the case of whether peacetime or emergency, I know how to handle my financial portfolio.
Financially, peacetime maybe means retirement. I want to retire with a passive income of $10,000 per month next time. So that I can travel, I can have a car, to drive my wife around, just enjoy the time. So that can be one of the financial goals that you want to have. Likely that you have one. Likely, it's just that maybe it's not so clear yet. So find a financial coach, or we call it financial advisor I think they will follow you through. They will guide you through. They give you proper way to plan. They also give you more clearer guide, whether is it achievable, whether is it far-fetched. Some people tell me they want to retire by 40.
So it's the same like today, if your goal is to just have a general active lifestyle or is to lose weight. I mean, your lose weight can be, I want to lose weight in the next 5 years. I want to lose weight in the next 5 months. Or 5 weeks, then everything will differ, based on intensity. Whether you go intermittent fasting, you do more workout, or you go calorie deficit, everything plays a part. So people to people, our fitness goal can differ, and that's perfectly fine. But the same actually goes also for your financial planning. You don't have to take the same amount of risk like someone who wants to lose weight in 5 weeks. I.e., in the financial perspective, you don't have to go full in crypto thinking that I'm gonna make a break in 5 weeks, right? So it's also very important your risk appetite, or rather your financial goal again. So having the blueprint is important, and also having someone to guide you through the entire process of it is also very important, because then at least you know, am I on point, from year to year, do I need to do any adjustment towards my goal and stuff like that.
That's right. So people like to say I want to retire early. So to us as a financial advisor, retire early means a lot of things. Early can be 30, 40, 50, 60, that can be early as well. So it really boils down to sitting down with financial advisor, let them know, share your thoughts, let them guide you through. And I think it's a journey It's a long journey. Financial advisor role is always to follow you through different life stages, and then of course eventually retire together, and then also reaching your goal. So this is the 5-step survival checklist. If you need more on this information, or you want a PDF copy of what we have mentioned, just let us know. You can drop a message or email us, and then we reply accordingly. Okay? So that's our 5-step survival checklist for life and finance. I hope you guys like it. Share with us some comments if you have on what's your financial checklist. Thank you.